Welcome to the Real View podcast, where Ohio Realtors connect you to innovators and influencers, keeping you with the real view of real estate. Whether you're a broker, agent, first-time homebuyer, industry leader, or just happen to stumble upon our podcast today, you can expect to hear tips, tools, tricks, interesting information, and so much more from the experts in Ohio's real estate game. Hi, everyone, and welcome back to the Real View podcast. I am your host, Allison Wiley, and welcome back to our summer series where we are featuring all of our amazing convention speakers coming up this year. We are going to be in Columbus from September 14th through the 16th, Ohio Realtors Annual Convention and Expo. Joining me today is one of our speakers. He is leading a session on the commercial real estate industry. So I always love when we get a little peek into the commercial side of things, because I know so oftentimes we are speaking about residential. So it's always a pleasure to hear this side of things. Xander Snyder is with us today. He is the principal commercial real estate economist for First American Financial Corporation, a premier provider of title, settlement, and risk solutions for real estate transactions, and the leader in the digital transformation of its industry. In his role, he provides analysis, commentary, and forecasts on commercial real estate trends. Xander, welcome onto the show. We're so excited to have you.
Hi, Allison. Thanks for having me. Looking forward to our conversation.
Me too. And you're going to give us a little preview of what we can expect in September. As I mentioned, you'll be with us. Your session is on Tuesday in the afternoon. All things commercial real estate. This is your world. You live and breathe it. It's going to be really great to learn from you and see what you're seeing. But first, I would love to hear a little bit more about yourself. Could you share with us a little bit about you, how you got started in the industry, and what's led you to where you are today?
Sure. Well, as you mentioned, I'm the commercial economist at First American Financial. So a lot of my work there is essentially data analysis, forecasting, and this takes the form of publishing external content for just general consumption, as well as internal advising, as well as talks of the sort that I'll be doing in Columbus, and just sharing the research that we do on our team. My background in commercial real estate goes back a while. I really kind of came up in a commercial real estate family. So I grew up going around to different apartment buildings and eventually some retail properties. And then after school, I went into an investment banking and kind of got some chops in finance in that area. I started a prop tech company. I've been an active investor in limited partner investments, as well as some wholly owned properties myself over the last 15 years. I worked as a data scientist at a real estate private equity company, helping with a medical office acquisition that was very data oriented. And after all of these years, I find myself here as an economist at First American studying something that I've been around a long time.
I love that. So it sounds like you have a really great wide range of experience in this. This is kind of your jam. And it's funny how many, of the guests that I have come on who say, this is a part of my family. Like, this is like what my family was doing, and you were exposed to it at a young age. So it makes total sense.
Yeah, exactly.
I want to know a little bit about what you have in store for us as a speaker at our convention. We're going to dive into the world of commercial real estate. As I mentioned, it's something we don't always get the chance to talk about, but when we do, it's so important. We know we have our commercial members out there and our other residential realtors who love to know about this kind of stuff. Tell us about your session. What are some of the things you have in store for us? What can we be excited about? Tell us a little bit about what you have in store.
I think it's a fascinating moment in the history of commercial real estate right now, for essentially the reason that I think that we've just gone through a major adjustment period, and those don't happen all too regularly. And I think that we're now firmly in the expansionary phase of the next cycle. And much of commercial real estate is cyclical. It depends when in the cycle you enter as an investor. That determines a lot of your returns. Doesn't mean people should be rushing in carelessly. So part of what I want to talk about is why I think we're in this new expansionary phase of the commercial real estate cycle, point possibly to some data that might give us an indication of how long the cycle might last, and talk about why this cycle and how this cycle will be different than the last two cycles. If you think about the one that ran roughly from 2010 to 2021, and then the one before that from roughly 2000 to 2001 to 2008. You can also maybe categorize that cycle from like the early 90s to 2008, depending on how you read it. But I think that one of the main differences today compared to 2000 to 2021 is going to be an emphasis on income returns. And that's not to say that commercial real estate isn't always focused on income returns to a certain extent. That's a big part of how the asset class functions and how people think about operating properties. But I do think that based on where cap rates are today, where they've been, where interest rates are, and the possibility for where they might go. And I mean, to summarize that, I think cap rates are going to trend sideways to probably modestly up for much of this cycle, depending on the asset class. That means that a lot of the valuation tailwinds that were present throughout the last two cycles, where cap rates were essentially declining secularly throughout the entire length of the cycle, I think that won't be with us here this time around. And I think that means that people are going to really need to focus on operating properties efficiently, managing expenses when possible, whenever the opportunity comes up, and not banking unreliably on aggressive rent growth assumptions. There will be more detail, of course, but I think that's really the meat of the conversation. We're in a new cycle. It's going to look different. What should you focus on in this cycle to succeed?
No, I love that. That's going to be really great to know, especially for our realtors who are so commercially focused. And then we have so many realtors who are investors as well. Will you be touching on that from a realtor investor side of things? I know that's a big part of what a lot of our realtor members do is they're in this space. Yes, they're buying and selling homes, but they do investing as well. Is that something you're going to be talking about too?
I'll certainly be talking about the market from the perspective of an investor, maybe not specifically a realtor investor who has one hand in both buckets, but I think it's important to think about what investor incentives and motivations are at any given time, because that ultimately impacts how capital moves, what types of deals it chases, what deals pencil, so on and so forth. So I'll certainly be talking about it from that perspective and what investors are looking at right now in different asset classes, what some of the risks are, what some of the possible opportunities are. All of that will be part of my talk.
Yeah, and that's great, and that's why I think this is a definitely a session that you want to circle as you're going through your convention schedule. If you are in the residential space, you're interested in doing this, it's going to be something for everyone, and that's why this is really a session you don't want to miss. Make sure you have it circled on your calendar. It's going to be really great. Anything in Ohio specifically that you're going to be talking about or that you're excited to share with us? And I know we're still a couple months away from the convention, so we might not know yet, but anything about specific to the Ohio market that, you're going to be infusing into what you're talking about?
Yeah, well, I've done some recent research on industrial commercial real estate, especially in the Midwest, including Ohio, including Columbus. So I'll probably fold some of that into my presentation. But the very high level takeaway of that is that Columbus has been one of just the destinations for industrial development over the last several years. There's been an incredible growth in inventory of new industrial space in and around Columbus. Rents have increased significantly. That doesn't mean that it's equally positive across the board. Most recently, very large industrial properties have been struggling a little bit more, in part because of just there are fewer tenants that can occupy them, and some of the uncertainties regarding trade policy that was circulating last year, and the uncertainty about whether or not different nodes of transportation and logistics would need to be relocated based on some of those changes in policy, I think has led to a pullback in certain very large tenants. But the flip side to that is if you look at smaller size properties, so under 50,000 square feet, industrial properties, very low vacancy rates, sort of all throughout the handful of Midwestern cities that I've covered in some recent research on the First American blog. So I'll be sure to talk about that. From an affordability perspective, Columbus, for looking at it from, when I say affordability, I mean like for residential units, certainly benefiting from some tailwinds and inflows of immigration over the last couple of years. I think it's interesting that if you look over the last maybe 5 years, 6 years, the trend initially in the pandemic were people flooding out into the Sunbelt cities looking for more space, but that demand really created a lot of new supply, and now so some of those markets are dealing with near-term supply overhang and sort of going through this adjustment. And that sort of supply explosion didn't occur to the same extent in the Midwest, including in Columbus. So you didn't have quite as much new inventory added, but one of the consequences of that is you saw relatively modest rent growth instead of rents falling in multifamily, and I think that is beginning to attract some attention across the country from different investors who are saying, okay, well, maybe long term I'm still bullish on on the Sun Belt. I still think that these are attractive places that people are going to want to live. The demand's still there. It might take some time to absorb that near-term oversupply. Where can I park some capital in the meantime, where maybe that supply risk isn't quite as present? And I think that that's part of the reason we're starting to see more investors eye the Midwest.
Yeah, that's so interesting, and absolutely something that we should be informed on, we should be thinking about, we should be hearing from people like you to make sure that, hey, if this is something you're seeing, how can realtors take advantage of that? How can we be ready for this to happen and be willing to be a part of it, be a part of this business, make it a part of our strategy moving forward? So I think it's going to be really exciting. I'm excited to hear, what makes Ohio and Columbus special, why it should be exciting, why realtors that live here and work here should be, fired up about what's happening around this area. It's going to be really interesting to see. I can't wait to hear what you have in store for us. It's going to be really cool. What do you want individuals to know who are coming to your session? Is there anything they should be prepared with as they head into your class? Is there anything you want them to know? Or what would you say to our realtors who are planning on attending? What should they know as they head into your class?
Let me put it this way. There's been a lot of macro news lately, and I think there are a lot of macro uncertainties. And I think that that's probably one of the biggest risks looking forward in the commercial real estate industry. But that's when I talk about risks to like demand, as an example, that's quite a different focus of narrative than what's captured a lot of attention over the last several years, which has been very capital markets oriented. What's going to happen with interest rates? What is the Fed going to do? All of that still matters. But I think that the vast majority of the interest rate shock driven price adjustment that we've just lived through over the last several years is essentially behind us. That doesn't mean that interest rates can't or won't go up. They might, but I don't think that they're going to go up nearly as quickly or as substantially as they did in the initial fight in 2022-23 against inflation. Of course, if inflation retrenches, that could be the case. But I think all of that to say that I'm actually fairly bullish about the commercial real estate market right now, speaking broadly. And of course, we can get into specific asset classes and all that. But I think part of the reason for that is because prices have come down so much. So what we were seeing in 23, 24, when everything was starting to kind of shift in an uncomfortable direction, was a lot of sellers saying, well, I'll just hang out and, maybe wait and see what happens. Maybe interest rates will come down. I think a lot of that hoping and waiting is essentially, behind us, or for the few hangouts that are potentially still there, they're facing near-term loan maturities, perhaps from 21, 22 vintages that are coming due. They're going to force a decision. And I think all of that to say that the near-term risks are less about interest rates moving one way or another, even though that'll still be a challenge that needs to be managed when you're underwriting new deals. I think the greatest risks come from the demand side. So whether or not a softer labor market continues, whether or not consumers can continue to spend as much as they have been, whether or not they're impacted by credit card debt that's rising with higher delinquency rates, whether that impacts retail sales. Renter household formation has been quite strong, and that's positive for multifamily. But if people's budgets are pressed, and only recently we have seen real wages begin to decline again for the first time in several years, that could potentially impact renter household formation. It can impact demand for retail space. If it can impact retail sales, and that can impact the demand for different types of warehouse space, goods that hold those different types of retail goods. So I think there are a lot of different risks in that direction. The flip side is that price correction has just happened, and I don't think anyone's holding their breath for rates to drop anymore. So we're coming to grips with where prices are right now, and I actually think that's a good thing. Prices have stabilized, and as a result of that large correction, as I mentioned earlier, I think that a lot of the impact from higher interest rates is mitigated to a certain extent, right? Because you can make a deal work at a higher interest rate if you can get it for 30% cheaper than you could previously. And a lot of that's going on right now. You're seeing a lot of opportunities to purchase properties below replacement costs. And that's obviously something that as a buyer you'd like to do if you can, because it means that building new properties in your market is not competitively affordable. So all that to say, we're at the beginning of a new cycle that's positive. New cycles tend to last a long time in commercial real estate, 10, 15, 20 years, depending on the cycle that you're looking at. And so there's a lot of runway ahead of us in this cycle, but there are a lot of near-term uncertainties that could potentially disrupt that early expansionary phase and make it a little bit more drawn out. that's, I think, ultimately the focus of my conversation. And I'll get into a lot of data that supports why I think these things. And then, of course, I'll ask the audience for questions and see if they agree with me or not.
Oh, that's going to be awesome. That's going to be fun. So kind of interactive style. We'll get a little Q&A going on, get to, interact with you and ask their questions and see, which with what you're explaining, if our realtor members are experiencing the same thing, that's something that'll be a lot of fun.
Exactly. Well, part of the fun for me about these events is, I'm a researcher, so I need to wake up in the morning and think about what's interesting to focus on. And what's better than being driven by market participants who are on the ground every day in different markets, noticing these trends that maybe they haven't had the time to step back and dig into the data on because they're busy closing deals. And that's really an opportunity for me to kind of point my compass in the right direction and say, this is a new thing to focus on that I hadn't really heard of before. So I'm looking forward to talking. I'm also really looking forward to interacting with people and hearing about what's on mind for everyone, what they're presently focused on, what some challenges are possibly that they're running into, because all of this turns into fodder for new work that gives us a better understanding of sort of where exactly we are right now. I think it's very difficult to know what exactly is going to happen in the future. It's good to be humble about that, but we can have a very good understanding of where we are. And part of that just comes from exchanging information and hearing about what's happening in the market from market participants.
Absolutely. And we have so many talented commercial realtors who I'm sure will be there. Will love to exchange their ideas, share with you their experiences and what they're witnessing in their jobs every day. And with that being said, do you have any advice for, our realtors practicing in today's market? I know you said, there's a new cycle here, a lot we can be excited about, a lot that we need to keep our eye on too. What would be your advice for people operating in the market today?
And we're talking about commercial brokers?
Yeah.
Commercial brokers, yeah. I think that for starters, no one should be holding their breath that interest rates are going to come down anymore. They might go up. The yield curve is quite flat. Even if we get like a single rate hike by the end of the year, does that possibly invert the yield curve again and put upward pressure on long-term rates? Possibly. So I would say, like, if any part of your business strategy is hoping for that to happen, that's not a strategy. That's just hopium, right? But I think in addition to that, there are a lot of opportunities right now for commercial brokers in particular to add a lot of value because there are so many distressed opportunities right now. And it's interesting because I think where we are in the cycle, we're going to have a combination of a lot of good news about market volume returning, transaction volume increasing, while the distress remains elevated and a lot of individual owners are struggling, right? Because if you bought a property in 2018 and then the correction happened and you had a 70% LTV, your property's gone down 30%, your equity is completely wiped out, right? So there's a lot of different people who are experiencing different things right now, even though I think we are, broadly speaking, in the early part of an expansion. All of that to say is that there's a lot of opportunity for brokers to find situations where someone's dealing with a real operating problem or capital reallocation problem, whether it's a larger corporate that is going through a larger portfolio-wide strategy of capital reallocation. Maybe they don't want to own as many properties anymore. All of those sorts of pain points that need to be solved are an opportunity for a broker to add value to some client, either on the buy side or the sell side. So I think that knowing where those sorts of typical transactions are going to be sourced from versus where some of the distressed transactions are going to be sourced from, how you can find them, what some of the typical problems are that need to get solved in those distressed situations, having a Rolodex of buyers who are able to step into those slightly more complicated operating situations and solve them and move quickly at closing and not leave the seller hanging, especially if they have some sort of motivation for exiting that property more quickly. Oftentimes that is where discounts come from. And of course, discounts are often where outsized returns come from. So it is a combination of, being in touch with where the market is, but also what types of problems different market participants are facing right now. Because even though I am long-term optimistic about commercial real estate and where we are in the cycle and all of these things we've talked about already, that doesn't mean there aren't people dealing with really challenging problems right now with capital stacks that need to be right-sized in one way or another, or lenders that are going to have to foreclose on assets and reposition them for some sort of a sale, especially in multifamily, where there's been a lot of bridge loans originated over the last several years in some of these oversupplied cities in the Sun Belt. All of those will be opportunities for brokers who know the right people, who are able to put the right people in touch, and are familiar with the constraints of each individual's capital base, whether or not they are more or less flexible based on how they've raised money, so on and so forth. So I think there are a lot of opportunities for brokers who are proactive and know where to find those opportunities and who to talk to solve them.
Lots of opportunities. Going to be so fascinating to hear more and see those charts. I love data. I love looking at charts. I think it's so important as realtors that we're tuning in and we're paying attention to this, because so much of the data that exists out there, can really help guide your business. And especially hearing from experts like you, Xander, who are going to tell us what you're seeing and what it means for us and how we can be prepared, to make the most of what you're seeing and hearing and experiencing. So we're looking forward to it. As I mentioned, your commercial real estate overview will be September 15th in the afternoon at our annual convention and Expo in Columbus. We're really looking forward to it. So I want to thank you so much for your time today, for giving a little preview into what we can be excited about as we head into September. And we're excited to hear more. We can't wait. Make sure to circle this session. So I want to thank you again, Xander, for coming on, and we will see you so soon.
My pleasure, Allison. Thanks for having me.
And to all of our listeners, thank you guys so much for tuning in. Make sure to register for this year's annual convention and Expo, September 14th through the 16th in Columbus, Ohio. Visit the Ohio Realtors website, ohiorealtors.org/convention, to see the full schedule and to register now. Thanks so much, guys, for tuning in. We'll be back with you next week.
Thank you for listening to The Real View. That wraps up today's episode. You can keep up with the latest on the podcast at ohiorealtors.org/therealview and on Apple or Google Podcasts, Spotify, or wherever you listen. Have questions, comments, or suggestions? We want to hear from you. Email us at podcast@ohiorealtors.org. We'll see you next time.